Hello and welcome to the look ahead for Thursday, the 6th of June with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be expecting trade data from Japan. And then in the European session, we've got the ECB interest rate decision, as well as Eurozone retail sales. Moving over to the US session, we'll have Canadian IV PMIs, as well as the US balance of trade and jobless claims. So let's start with the ECB interest rate decision. That's going to be the main focus. We've expecting the ECB to cut interest rates by 25 basis points to 3.75%. The interest rate decision comes as we've seen inflation has actually ticked slightly higher, up to 2.6% in the last reading. But we've also seen that unemployment's at a record low. And that negotiated wages were stronger than expected in Q1. So I think that this makes it really quite a unique position for the ECB to be cutting interest rates in. And it also raises questions over what we can expect from the ECB from throughout the rest of the year. And that's going to be the main focus for the markets. What are we expecting? How many more rate cuts? I mean, if we see the ECB increase their inflation projection, then that could be sort of more of a hawkish tilt to this rate cut. At the moment, the market's pricing in 2 rate cuts by the ECB this year. That is down from 3 not so long ago. Now, as we can see, this is the Euro US dollar chart we're looking at here. We can see that recent rise higher that we've seen in the Euro US dollar. That's a combination of US dollar weakness and also those stronger numbers coming in from the Eurozone, suggesting that the ECB may not be able to cut interest rates as much as we'd initially expected. Now, as far as the chart concerned, levels to be watching out for. Now, we've seen that level 109 was reached just at the start of this month. We've seen the price has actually eased off there, but the RSI is still supportive of further gains. We're still above that rising trend line. So buyers are going to be looking to take out that 109 level, and we could do that if we get a hawkish cut from the ECB. Above the 109 level, watch out for 109.80. That was the March high, 2024 high, no, March high, sorry. And then on the downside, support can be seen at the 108.10 level, which is the 100 SMA. Also, the confluence with the rising trend line. Below that, you've got 107.80, which is the 200 SMA. So just having a look with what else is going on. This is the US dollar index. Now, as I said, we've seen that sort of slight weakness in the US dollar. And that's basically, we've had some rather weak figures coming out from the US this week. We had the weaker than expected manufacturing ISM. We also had the weaker than expected jobless claim, job openings, weakest level since 2021. We also had weak ADP payrolls. So that's been putting pressure on the US dollar, but we've had much stronger than expected ISM. So the data sort of is still coming through a little bit mixed as far as the US is concerned. Now, the US dollar has managed to find support on that 104 level. Attention is going to be on very much, I think, on the jobless claims tomorrow. Jobless claims haven't really been giving too many signs of weakness. They're sort of supportive of a relatively strong labour market, expected to come in at 220,000, more or less in line with the previous week. If we get some weakness in those jobless claims figures, then that could create some pressure for the US dollar, particularly ahead of Friday's non-farm payroll data. Now, if we get a break below that 104 level, watch out for 103.20 on the downside. On the upside, the 200 SMA is just capping any gains. That's at 104.40. If we get a break above there, then watch out for 105, which was the late May high. Just whilst we're talking about the US and what's been going on, obviously this is the potential of weaker data and could mean that the Federal Reserve is going to be cutting interest rates sooner. The market's pricing in around a 65% probability of a rate cut in September now. That's been brought up from below 50% at the end of last week. So Prospect of Federal Reserve cutting rates sooner is giving stocks a boost. We've got the S&P 500 on the screen here. It's pushed above the support level that we've seen at 52.77 as heading towards the 53.50 and all-time highs. On the downside, if we do get a break below that 52.77, so I think there are concerns. If we get some concerns that the US could be heading for a recession, that could add pressure to stocks, or if we get stronger than expected data, that could also add pressure to stocks. On the downside, watch out for 52.77 below that 51.90. And just finally, we're going to take a quick look here at US dollar CAD. We've got the IV PMIs actually meant to come through reasonably strong, up at 65, up from 63. But this is coming on the back of today's Bank of Canada interest rate decision, where the central bank cut interest rates as expected by 25 basis points. Kicking off the sort of central bank's cutting cycle potentially with the ECB expected tomorrow. Now we can see that move resulted in a weakening of the Canadian dollar, which has risen to a weekly high. But if you just have a look at the chart, I mean, it's managed to rise up to around the 137.40 level, which was the previous high that we've seen in previous weeks, but it hasn't really managed to make much more significant moves above that. So it's moved back within that descending channel. I think as far as levels to watch out for, 137.40, that's the level it failed at. Well, that's where resistance sits. A rise above there would create a higher high, and that would be then looking at the sort of 138 level. On the downside, if we find that we have, for example, weaker US jobless claims and stronger Canadian IV PMIs, then we could find that 136 comes into focus. That's the June low below there, 135.80, which is the 200 SMA. Excellent. I hope you like what you've been watching. If you do, then please do give this video a like. Otherwise, please do subscribe for more videos like